Good morning. Welcome to Market Day Report. And we'll be talking about a cattle on feed report. We picked that up on Friday after the close. We also have a few reports coming out this week, including a peanut stocks and processing report. That comes out a little later today. Annual dairy products report comes out tomorrow after the close. Also, a U.S. ag trade report out tomorrow. And we'll push our weekly export sales numbers from Thursday, since that's Thanksgiving and USDA is off. We'll push that to Friday. All right, we've set the stage for this week. Let's jump in, see how markets are trading. And in the overnight session, down on corn, December 422 3/4, down 2 3/4 cents. For soybeans, the January contract nickel higher, 988.5. What about the wheat market? We'll start Chicago, July down 9, 573 3/4. For hard red, down 9.5 at 570.5. And for spring wheat, December contract, nickel lower, 581. In New York, cotton futures in the overnight session, 75 higher on the March at 71.52. Brian Hoops is president, Midwest Market Solutions. Okay, Brian, what are you watching on the row crops?
Hey, good morning, Tony. Well, we had a private export sale announcement again, but this time it was corn. Remember, last week we were shut out the entire week of corn sales. It was all soybean meal, soybeans, and soybean oil. And this time it was about 454,000 metric tons of corn sold to Mexico. That's almost 18 million bushels, so a good number for corn. May help us find some support this morning. One of the concerns I have about the corn market is the lack of exports last week, but also the fact that we have deliveries beginning this week. First notice day against that December futures contract. And with the funds holding net long positions in corn, there's a big open interest in December corn yet, about 271,000 contracts. That's fairly large, and a lot of that is probably long positions out there by the funds. They're probably going to have to roll out of these contracts this week, move out of December into March or May contracts. Could put some pressure against December into that delivery period. As you mentioned, it's a holiday shortened trading week as well. So we're kind of disrupted as far as our reports go. Won't have crop progress this afternoon. I think those numbers are all wrapped up, or we may have one more, but it's only going to be on wheat conditions. Then export sales on Friday morning, holiday shortened trading week on Friday as well. Friday's an early close. So maybe a lot of trade in the next 2 to 3 days. And then after that, things dry up considerably, I think. So yeah, a lot of things to watch. And in fact, we saw soybeans trade higher over the weekend, and that was on rumors that China was in buying U.S. soybeans. Now, we didn't have a confirmation of that this morning, so trade may take it as a little bit disappointing, but they're going to be watching these export sale announcements on Tuesday, Wednesday morning, signs that China is buying U.S. soybeans. If not, we're going to give back some of these gains that the soybean crop has seen in the overnight trade.
All right, Brian, hang on just a moment. We'll take a quick break. We'll come back and talk cattle on feed report. Market Day report continues after this. Okay, cattle on feed report rolling out after the close on Friday. What was in it? We'll find out in just a moment. Before that cattle on feed report, though, we closed the markets for live cattle. And it was a higher day on Friday with the December up $1.17, 77 higher on the February at 188.20 for the feeders. Ahead of that report, 85 higher on January, 254.30. Hog trade on Friday finished the session higher. December up 87, 81.67, and the June contract did it again. Did not close above $100, but did hit it during the session. Let's bring back in Brian Hoops, Midwest Market Solutions. When I look at cattle on feed numbers, look like they fell right in line with expectations.
Yeah, you're right, Tony. They were very close to expectations. Placement numbers is probably going to attract the most attention. It was a little bit above trade estimates, about a 5% larger than last year and about 1.5% more than the average trade guess. So might see some selling coming into February, April, June contracts based off of that on feed supplies. Very, very close to estimates and really close to last year's numbers. So I don't think you're going to see big movement off of this report. Maybe a little bit of weakness to start the morning, but probably going to see some recovery. You know, the cash trade last week developed at 186 to 187 in the Southern Plains. That was better than expected, a couple dollars higher than a week ago. Right now, calls are looking for higher money once again. Packers, no doubt, will be trying to prop up some lost margins this week with the slowdown on Thursday because of the holiday of Thanksgiving and lack of kills there. So they do hope that the box beef moves higher. That'll help out their lost margins. We'll have a cold storage report out this afternoon as well. We haven't had that yet for the month. So that's coming out this afternoon, 2 o'clock. Could give us some position, especially in that hog market going into the report. But overall, I think, you know, you're struggling at these levels for the hog market. We've ran into some weekly resistance. We've seen commercial selling. All that turns to be negative in the front month for the hogs. We're flirting with those $100, as you mentioned, in those summer months. We may get there, but it might be later into the spring and summer before we're able to substantially trade above $100 in those summer months, just because that we're running into this overhead resistance. Futures market pretty much lined up with that lean hog index as well.
Well, we'll give you a day to catch your breath, and we'll see you back here on Wednesday morning. It's Brian Hoops, Midwest Market Solutions.